Hello everyone, welcome to Fearfully Greedy. If you are new here, I share a public portfolio where I have been adding cash for the last 2 years. I try to share my decision making and what I learned, my success and failures along the way. The portfolio is currently sitting at 26,800 euros with a modest gain of close to 5%. Most of the money has been added over time, keep that in mind. I'm lagging the S&P by 9.6% and in line with the Nasdaq, although I hold or have held little tech, we could say. The portfolio has been in the red for 2022 with a loss of 4%, but so far pretty resilient, all things considered. At the moment, I have 6 positions: Warrior Met Gold at 39%, Shinokane 19%, Naked Wine 16%, Alibaba 16%, Ra International 5%, and Interra 5%. It might look a bit worse soon, since Interra might become a zero, not completely since we have had some dividends, but still. Remember, you can also follow the trades and updates in the Google Sheets, link in the description, or subscribing. Feel free to do it. Since the last video, I haven't bought anything, but I'm eyeing adding to the Naked Wines position a few more shares. The results are in a few days, and we know they have kept up with growth from COVID, at least with very modest growth in the last year. Very much looking forward to what they can build in the next decade from this higher base. For Warrior, we see ridiculous met coal market, at least on price. I hope we can keep this going for a few quarters. My expectation is so, with all the shortage globally and the stock supply. They have been dealing with the strike for over a year now, and they made a page in their website that they bring some facts to their labor conditions. And of course, there are at least 2 sides to each story, so keep that in mind. I'm hoping it gets resolved eventually, but as I said, it's been over a year. With the extra cash from the results, they paid a special dividend. For me, it was a pre-tax $150, and they are also restarting the Blue Creek project I've talked to you about a few times. Baba, little to say, still a great company in a riskier geography, but one of the best companies in the world. Keeps growing and posting solid results. Just happy to have bought at a ridiculous valuation. We saw a big decrease in profitability coming from an increase in investments and a much lower net profit from losses in investments, particularly in the lower valuation in market securities. My opinion, this is noise and little signal, and happy to keep seeing the results. Then Interra is looking more and more like a zero. They have had their assets frozen in end of May, and last week declared bankruptcy in the country of Lithuania. Since all the government bodies forced them to stop trading completely, this is looking like not so good. I guess this serves someone, like not sure who, but probably. Not much else to add. It's business and investing, learn and move on. Ra International has had it pretty rough in the last year. Remember, this is the remote service company operating in Africa, mostly with a growing share of the more recurrent facility management segment. This is still the case. This segment has been very resilient in a very bad year. The Mozambique camp fiasco due to the war and conflict has become unrecoverable. They are salvaging the materials, but definitely a big loss here. They also lost a few extra content, which reset the order book to 100 million. I'm excited for them to build and keep building from this lower base. 10 years down the road, my bet is we will barely remember this, but who knows? It's a tiny company and the risk is there, but not looking to sell my shares. I also wanted to add a section where I share what I've been reading with some short takeaways, not the usual book summary, just a few key points to pique your interest maybe. This week I've been reading the book from the year 2000 called Keep the Family Baggage Out of the Family Business. I think it's really worth a read if you are in any way involved in a family business. I do, so that's why I picked it. It really spotlights how family businesses are more run like families instead of business, and where that can become tricky since everyone is already brutal and competitive as it is, so adding that handicap can bring a lot of ruin. How the baggage built in the upbringing is still there when you work with family, the whole succession problematic, and it always brings the side of the non-family employee, since you also don't have a normal working environment even when you are not from the family. The author says there are 7 deadly sins in the family business. First, bringing baggage from the childhood into the business. Second, running the business like you run a family. Business requires very different practices other than a family. Third, not acknowledging your adult kids as adults. Shocking. Number 4, not acknowledging family members' individuality, as they are humans and they need to look for themselves too. Number 5, founders, be it fathers or mothers, have dominating personalities that can subjugate everyone instead of letting them flourish. 6, not bringing up problems in the business to keep peace. And 7, kids not developing or growing or resolving childhood issues before starting to work in the family business. Great book, slightly repetitive, but worth the read if you are in this situation. I've got it shipped to me from the US for 4 or 5 euros, so it was an old print and worth the read. Then, for what I've been digging into sector or stock-wise, this last week's has been recreational vehicles, and especially the top 2 dogs, or the 2 top dogs, Winnebago and Thor Industries. We have had a ridiculous spike in shipments, breaking the long-term trend, and I'm trying to think through how this space will look in a normalized world, let's say 2 to 5 years from now. Will it fall back to what the normal trend would have been, or will it keep some of the increased shipments, or will average down the last 3 years and have a sharp fall, like from the last year's sales? The stocks are priced for that last scenario, looks like around 4 times earnings. I will try to figure out the sector and individual companies' unit of economics, also how their balance sheets and income statement looks, the margins, all that. If that sheds some light to see the superior value proposition here, as well as they are a business that I would like to hold for decades. Well, that's all. I will try to keep this format for most of the videos, and then just bring in the longer term format videos when I have a full thesis or something more important to bring. So then just consider liking if you haven't done so, subscribing if you're not subscribed. It really helps a lot. See you on the next one. Please be safe.